I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Joe Tigay, Managing Partner, Equity Armor Investments, for an update on the Nasdaq-100. We'll talk a little bit of volatility and, of course, EAVOL as a hedge for your portfolio. Joe, it's great to see you as always. Welcome back to Trade Talks. And you know what? It's so interesting to see how the market continues to take what could potentially be volatility events in stride. Of course, we got some commentary on tapering, Evergrande, the debt ceiling. There's just so much going on out there. Let's talk about how the market's reacting and how you're thinking about these volatility events.
Yeah, we've had having a great 2-day stretch here. Of course, the Nasdaq below its 50-day moving average on the morning of Wednesday, and then we had news out of China, and of course we had the Fed speak. So really a follow-through rally. We're back above that 50-day moving average. That's so critical to me in the Nasdaq, and we're following through there, and we're continuing to rally throughout the day. I think the Fed likes what the Fed, or the market is loving what the Fed had to say. They're saying, tapering is going to happen as long as the economy remains good. And they're also saying, inflation happens to be hot, but it's not too hot. We expect it to come back to pre-COVID levels eventually. And right now the data's lukewarm on that. We'll see if that is true in the long run. But in the meantime, the Fed's loving the liquidity, the market's loving the liquidity the Fed is providing, and maybe there was just some buyers on hold for a couple days, and then really coming back into waves after we got the China news. Debt seems a lot more comfortable to own globally, and of course, the Fed just having tremendous liquidity out there. The market's going higher, and there's nowhere else to put the money.
Yeah, but Joe, it's so interesting. Even though we have the continued liquidity from the Fed, I feel like with what happened with Evergrande, and we still don't know how that's ultimately going to play out. And then the debt ceiling, which to me seems to be, I can't believe the market's almost not ignoring it, but just kind of trading right through it. I mean, we ran the risk of nearly defaulting in 2011. We saw what that did to markets, and it doesn't seem as if the situation has improved at all since then. I mean, look at where our debt is now. I mean, we really do run the risk.
Yeah, we'll be watching that play out. I mean, now the market's seen this movie now a few times. Actually, talk about 2011. Of course, it seems to keep on happening every time it comes up. And the market's base case, of course, is that the debt ceiling will be lifted, will be raised eventually. However, the way that it seems to play out is that it has to take the 11th hour hurdle for that bill to finally get passed. People have to finally say, okay, we don't want this worst case scenario to happen, to actually come and make some sort of compromise. And actually watching Congress this time, there's no reason to think anything else will happen. It just seems like the sides are so far opposed right now, it's really going to be hard to see anything come together before the deal. But it's happened before. They somehow are able to make a deal before. It's in everybody's best interest to make a deal, but somehow they just need that midnight deadline to actually get to work. And while it's happened in the past, and this is, we've been able to get through it, the closer we get to that deadline, the more rocky the markets become. And I think we're just at the starting phases of that. I think if we get closer and closer, we should expect a little bit more volatility.
Right, so we have our portfolios, we're up a good amount on the year. And so think about EAVOL, right? Have a nice basket of Nasdaq-100 stocks. How would that work in someone's portfolio?
Yeah, well, the volatility just is used to our advantage. Of course, we had a day leg on Tuesday. We use that volatility when it's higher. We're able to harvest it back and put it back in the Nasdaq. So that's really where EAVOL is going to shine when volatility rises, and we expect it to rise and fall over time. When volatility rises, that's the time to buy stocks historically, and I don't think anything in the future will be any different. So I expect over time the Nasdaq-100 will go higher. While it's going higher, expect to see volatility, and EAVOL allows us to use that volatility to our advantage. It allows us to buy stocks cheap, sell vol high.
All right, Joe, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.